Investing in exchange-traded funds, ETFs, is an increasingly popular way to diversify your portfolio and take advantage of a variety of different markets. With so many ETFs to choose from, it can be difficult to know which ones are best for you. To help guide you in the right direction, this video takes a look at the top 10 ETFs based on performance and fees. Note: invest at your own risk. This videos does not guarantee future success implied or otherwise. SPDR S&P 500 ETF, SPY. The SPDR S&P 500 ETF, SPY, is a popular exchange-traded fund used to track the performance of the S&P 500 stock index. This ETF provides investors with instant diversification and exposure to large-cap companies in the United States, making it one of the most widely traded and closely followed funds in this category. SPY consists of stocks from all 11 sectors within the S&P 500 index, including financials, industrials, technology and healthcare. Its holdings are adjusted periodically to maintain consistency with its target benchmark. SPY offers investors an easy way to access these major market indices without having to buy stocks directly or pay costly commissions for actively managed mutual funds. As such, it has become a go-to investment vehicle for many institutions and individuals seeking broad equity exposure at low cost. Vanguard Total Stock Market ETF, VTI. Vanguard Total Stock Market ETF, VTI, is a great option for those looking to diversify their portfolios. This exchange-traded fund, ETF, offers exposure to the entire U.S. stock market, giving investors an easy way to access stocks from large, mid and small cap companies. VTI has become one of the most popular ETFs on the market with a total asset value of over $140 billion as of June 2019. The low cost associated with investing in VTI makes it an attractive option for investors who are trying to build a portfolio without breaking the bank. The expense ratio is only 0.04%, which means that investors keep more of their money in their pockets rather than paying out in fees and commissions. Invesco QQQ Trust, QQQ. Invesco QQQ Trust, QQQ, is one of the top 10 most popular exchange-traded funds, ETFs, on the market. It tracks the Nasdaq 100, which makes up over 100 of the largest and most influential non-financial companies listed on the Nasdaq stock market. This ETF offers exposure to a diverse range of industries, with technology stocks making up nearly half its holdings. With an annual expense ratio of 0.2%, Invesco QQQ Trust, QQQ, is one of the lowest cost ETFs in its category. This low fee structure helps investors maximize their returns by not having to pay high fees for their investments. Furthermore, it has a trading volume that gets to around 140 million shares per day and a strong liquidity profile that gives investors access to quick trades and liquidations when needed. iShares Core S&P 500 ETF, IVV. The iShares Core S&P 500 ETF, IVV, is a popular exchange-traded fund, ETF, that tracks the performance of the S&P 500 index. The ETF provides exposure to some of the world's largest and most profitable companies, representing roughly 80% of the U.S. equity markets. IVV has low operating expenses compared to other funds and is one of the best-performing ETFs in its asset class. It has become a popular choice for both long-term investors who want broad-based exposure to large U.S. stocks as well as day traders looking for an affordable way to gain access to U.S. blue chips on margin accounts or through options trading strategies such as spreads and straddles. Vanguard FTSE Developed Markets ETF, VEA. The Vanguard FTSE Developed Markets ETF, VEA, is one of the top 10 exchange-traded funds, ETFs, that investors should consider. This fund, which was launched in 2005, tracks the performance of large and mid-cap stocks from developed markets outside the U.S., including those in Europe and Asia. It has a low expense ratio of just 0.09%, making it an attractive option for those looking to diversify their portfolio beyond domestic holdings. VEA covers more than 2,000 stocks from almost 20 countries around the world, giving investors a broad exposure to developed markets outside America. The fund also offers excellent liquidity and tight bid-ask spreads, so investors can buy and sell shares without significant costs or delays. Moreover, VEA's dividend yield is slightly higher than its benchmark index's average dividend yield at 3%. iShares Core MSCI Emerging Markets ETF, IEMG. The iShares Core MSCI Emerging Markets ETF, IEMG, is one of the top 10 exchange-traded funds, ETFs, available today. It provides investors with an easy and cost-effective way to invest in the emerging markets worldwide. The IEMG ETF tracks the performance of the MSCI Emerging Markets Index, which consists of stocks from over 25 countries including China, India, Brazil, Russia and South Korea. The IEMG ETF offers investors a number of advantages. These include low costs, broad diversification and exposure to companies which are expected to benefit from high economic growth in emerging markets. Additionally, its focus on mid-capitalization stocks provides investors with higher returns than larger companies due to their greater potential for long-term growth. Vanguard Value ETF, VTV. The Vanguard Value ETF, VTV, is an exchange-traded fund that tracks the performance of the CRSP US Large Cap Value Index. It offers a great opportunity for investors to diversify their portfolios with a low-cost, passively managed ETF. VTV holds stocks from various sectors and industries within the large cap value space, allowing investors to gain exposure to several different companies at once. VTV has an expense ratio of 0.05%, making it one of the cheapest funds available on the market today. It also has a very low tracking error rate, meaning that it closely follows its benchmark index without much deviation in its performance. In addition, VTV has been actively managed since inception and is regularly rebalanced to ensure that it remains consistent with its target index composition over time. Furthermore, VTV pays out an average dividend yield of 1%. iShares Core US Aggregate Bond ETF, AGG. The iShares Core US Aggregate Bond ETF, AGG, is one of the most popular and widely used exchange-traded funds, ETFs, on the market today. It has consistently been rated as one of the top 10 ETFs since its introduction in 2003 and has become a cornerstone of many investment portfolios worldwide. AGG seeks to track the performance of the Bloomberg Barclays US Aggregate Bond Index, which tracks a wide range of fixed-income securities issued by both American and international entities spanning across numerous sectors, maturities, coupons, and credit quality levels. This makes it an ideal choice for investors looking for diversification within their bond portfolio while attempting to minimize risk exposure at the same time. AGG also offers cost efficiency with an expense ratio of 0. Vanguard Growth ETF, VUG. Vanguard Growth ETF, VUG, is one of the top 10 exchange-traded funds, ETFs, among hundreds available in the financial markets. This ETF offers investors exposure to large and mid-cap companies that have the potential for long-term capital appreciation. The fund's portfolio consists of various growth stocks, selected by a team of experienced professionals at Vanguard, one of the world's largest financial services companies. Investors who are looking for diversification within their portfolios can take advantage of VUG as it invests in a variety of sectors such as technology, healthcare and consumer discretionary stocks. It has an expense ratio of 0.04% and currently has $50 billion in assets under management. Furthermore, VUG is composed mostly of US-based equities with some international exposure to non-US. iShares Russell 1000 ETF, IWB. The iShares Russell 1000 ETF, IWB, is one of the top 10 exchange-traded funds, ETFs, of all time. Known as a broad-based equity fund, IWB provides investors with exposure to the large-cap stocks of US-based companies in the Russell 1000 index. With over $7 billion in assets under management, IWB has become increasingly popular among long-term and short-term investors alike who are looking for diversification and low operational costs. IWB seeks to track the performance of the index it follows by investing at least 90% of its total assets in securities that make up the index, while also attempting to replicate its performance before fees and expenses. This ETF charges a low expense ratio of 0.20%, which makes it appealing compared to other passively managed funds and traditional mutual funds that come with higher fees attached. In conclusion, the list of the top 10 ETFs is an important one. While it is important to understand which ETFs are performing the best, investors should always remember to do their own research before investing. After all, what works for some may not be suitable for others. Before selecting and investing in any of these ETFs, investors should review their financial goals and objectives as well as assess their risk tolerance and time horizon. Additionally, they should also take into account fees and other costs associated with each ETF before making a decision about which one to invest in or if it's even appropriate for them at all. By taking this extra step, investors can ensure that they are making smart investment decisions that benefit them long-term and help them reach their financial goals. Don't forget to like, comment, share, and subscribe for future content. Thanks for watching.